Okay, we're going to go ahead and get started. Good evening, and thank you for attending our home buying webinar presented by Provident Credit Union. Our session today should last for an hour with a Q&A session at the end. During the presentation, you'll have the ability to send questions to our webinar staff through the questions pane. Simply type in your question and click send. We will address all Q&A at the end of today's session, and a copy of the slide deck will be emailed to all attendees in about a week. Our first presenter is Norm Whiteman. Norm, would you like to introduce yourself?
Yes, good evening, and thank you so very much for joining us tonight. My name is Norm Whiteman. I'm senior consultant, mortgage consultant at Provident. I have over 25 years of lending, as it says, done many transactions and all types of mortgage products and, in fact, investment banking things I did. And then my approach is a very personal approach. Um, mortgages tend to be a transaction, but I try to make it a more than transaction, that make it more of um, a consulting. So anyway, that's who I am, and thank you again for coming.
And Michael Mendenhall.
Good evening, everyone. Thank you for attending tonight's webinar presentation. I hope you get a lot out of it. And I have been practicing real estate. Oh, it says 38 years. Actually, this is my 45th year, but not much difference there. Long time in the Bay Area. And I'm so fortunate to be brought in by Provident to talk about the real estate portion of today's webinar. And extremely excited that Norm Whitman is with us tonight. Fantastic loan originator. He's going to give you a lot of good information. Happy you're here. Thank you.
Yeah, it's a little bit about Provident Credit Union. As it indicates, we're the 108th largest credit union and 20th largest in California. I checked those numbers, and that's absolutely true. And also, we started out and opened in 1950 by serving, as it says, the California Teachers Association. We still have that relationship, but we have relationships with many other entities. We're headquarters in San Francisco Bay Area. We have 21 branches, one of which is in Folsom. The rest are around the Bay Area, strategically placed. And we are very accessible. As a side note, we only lend in California, but that includes Southern California, Central California, and Northern California. And as it indicates, we got over $3.5 billion in assets, and we have earned, and rightfully so, earned a name for safety and for soundness. Why choose Provident? I'll let you read through those. Probably the one aspect or one accolade we received was most recently, and we were rated to be one of the best credit unions in America by Newsweek, and that just happened probably a couple months ago. But as you can see, we're well thought of, and we're good. We're a good entity. Sorry. Go ahead, Mike.
Okay. Our goal tonight, help assist you in understanding mortgage financing options. Again, Norm is going to give you all that great information, help you define your ownership objectives and how to achieve them. Talking about the home buying process. Demonstrate how you can buy a home for the best price with the most favorable terms. It's interesting. The Bay Area is one of the most crazy real estate markets there is. You can drive 1 mile and housing can go down 3 times in value or up 3 times in value. So it's really a matter of geographically where you purchased. So there's a home in your price range that's nice and it's out there for you. Help you to understand what to expect when your offer is accepted. We'll talk about the escrow process and how that works. Okay. All right, here's the actual stepping stones to tonight's workshop. The steps to successful home ownership. First one is educating yourself about home buying. I'm applauding all of you for attending. More information is better. If anybody would like a book that applies to the geographic location where they are purchasing a home, just send me an email. Let me know where you're buying and what type of property you're looking for, and I will recommend a book you could find online that would help you in the future. And then Norm is going to go through the application and obtain a full pre-approval. He's going to explain basically how simple that is to do with Provident. We're going to summarize your costs. What are all the costs associated with purchasing a home? I'm not talking about the down payment, I'm talking about all those additional costs and fees. Next one is how to work with a professional real estate agent. I think you'll get an idea of what I do, and that will kind of explain how to work with a professional real estate agent as we finish up through tonight's webinar. Building your home search. There's two parts to building a home search. It's getting the information, entering it into a good program that's going to be searching automatically for you. And it's a great educational tool because we can adjust the parameters, the search parameters, and help you narrow down to what you're looking for. Next part is finding a home. First part of finding a home is understanding the value of the property. And I'm going to explain to you what a market analysis is to help us determine what the value of the home is. We don't care what the list price is. We want to find the value. And that's really fun to do for us. And I think you'll enjoy it too. Second part of finding a home is the condition of the property. I'm going to talk a little bit about all the inspections that tell us the condition of the property prior to you making an offer. Lastly, making an offer. What are the steps? How does the process work? Okay.
Home buying steps. You have to prepare yourself. First of all, you want to make sure that you have enough money or assets available, liquid assets for down payment, closing costs, and then reserves. And what reserves are monies that after the closing costs and down payments have been paid, that you have left over either in retirement funds or liquid funds, whichever, that will keep you in case you have a situation where you need to have reserves to make payments. Typically, we look anywhere between 2 to 6 months of the total payments of your house, which would be principal, interest, taxes, and insurance. Select a realtor like Michael. He's great. He's wonderful. He's been doing it for a long time. Expect a 30-day close, but to close alone with that transaction. But typically, we're closing most of those in 21 days to 25 days. It's just that's a competitive advantage that we have, and any buyers that are approved with us have. And then, as the most important thing from my perspective, and as for Michael, and actually any real estate agent and sellers, is they want to make sure you're pre-approved and make sure you shop for what within your means. And that's something that I help you decide. A lot of times people can be approved for a higher amount of money, but you've got to be careful and make sure you work within your means. You don't probably want to eat top ramen every night to be able to afford to buy a house. Next. So we're going to go over a little bit over the pre-approval process. I call it the 4 C's: capacity, capital, collateral, and credit, and a little bit about each. Capacity is your ability to make the payment, and that's be able to pay both your mortgage payment plus your other debt obligations, and that means income. So we work with salary people. We include bonuses, commissions, and RSUs. We're aggressive on the RSUs as long as you've been receiving for the last 2 years, and we'll continue for the next 3 years. We use 100% of RSU income. Some lenders don't, but we do. We also lend to self-employed folks, Schedule C, LLCs, and corporations. And other income that we do accept is rental income, alimony, child support, and distribution from retirement assets, defined benefit plans if you're of age to do that. Next piece is capital. That's the money for the down payment, closing costs, and reserves. And typically that's checking, savings, CDs, money market, mutual funds, retirement funds. Most people use retirement funds for the reserves, stock accounts, overseas accounts, as long as that we can show that it's from a large entity, bank, financial entity across the seas, and then that we can donate it in US dollars. And of course, we will look at gift funds. Gift funds have to come from a relative, a close relative. Collateral is the property, the value of the property, and the type of property. Could be a single family residence, a townhome, condo, 2 or 3 or 4 unit. That's really important in terms of deciding what the loan amount will be and what the loan can be. The value is substantiated by an appraisal, and the appraised value is less than, if the appraised value is less than the contract price, we will use whatever the lower of the two values are, and will need to be negotiated with sellers if there's an appraisal contingencies. seeing most offers right now where there's no appraisal contingencies and no loan contingencies, and that's because that the seller and or the buyer's realtor have a pretty good idea what the market value. And I haven't seen in the last 3.5 years where the appraised value is lower than what the contract price is. And again, occupancy is also important to the type of loan you're able to be approved with, but we will look at owner occupied and investment properties. Okay. And as I indicate here, it will affect the type of program, the interest rate, and fees. As an investment property, the rates will be higher and there'll be more fees to that. And then the last C is the credit. That's really important. It's the kind of credit that you have. We look at the credit from all three bureaus, Experian, Equifax, and TransUnion. We take the middle score of those three, and that becomes a representative credit score. If there are two borrowers, as it indicates, we run credit for both. We look at the middle score of the two. We take the lower of the two scores. So anyway, the capacity, the capital, the collateral, and the credit are really important. And I kind of went through this thing pretty fast. You'll see this when we send it out to you in a week or so. Next, please. The next step is the pre-approval elements. These are the things that we look at. We look at the loan to value. Loan to get value is the loan compared to the appraised value or the purchase price. Debt to income ratio is a way to measure what your affordability can be. That's basically, we look at what your total monthly mortgage payment is with principal, interest, taxes, and insurance, mortgage insurance if applicable, and HOA or homeowners association dues, which are pretty prevalent with condos and also townhomes. So we take those numbers. We also add whatever debts you have on your credit report. You could have car loans, student loans, credit cards, things like that. We take that total debt, we divide it by your gross monthly income, and that gives us what the debt to income ratio is, and it has to be in the range of somewhere around between 40% and 45%. We also look at the property type. What kind of property is it? Is it single family residence? Is it a townhome, condo? Townhomes and condominiums usually have HOA dues and are also included, as you said earlier, in the monthly housing payment. Also reserves. That reserve comes up again. That's liquid monies that are required after closing, which means that after you've made the down payment and paid the closing costs, we look at those reserves again to keep you from having issues down the road. Case in point is when we're in part of the pandemic, a lot of people were on deferrals and or lost their jobs, and it was good that they had reserves, because Provident, we did not have any issues with any loans during that period of time. So that's because reserves are really important, and we count on those things. Next. And what not to do, and this is really important, don't buy a car when you're in the process or get any other loans. Don't co-sign on any loans. Miscellaneous payments and credit cards and other loans, don't miss any payments, because if you miss a payment on a credit card, it's a 30-day late, that will cost you about 60 to 70, maybe 80 points on your credit score. So be very careful about that. Change jobs. Sometimes people do it. We just need to see the offer letter, and we'll need to see one pay statement from the new employer showing that you are getting paid there. And also we'll have to see the offer letter. And then don't move money around. And this came into play this week for one of my transactions where people were moving around money up until the day before they were supposed to close, and it just creates problems. And so we stress that with people from the very beginning. We go through it again during the process, and again a few days before they close, to make sure there's no movement of money, because that becomes a nightmare, because we have to track where money comes from one account to another. And sometimes people will come into a transaction, will email money into, not email, excuse me, will wire transfer funds into escrow from accounts that we don't have any clue. And so that becomes a delay in closing the transaction. Next. Types of mortgages that we do here at Provident, we do conventional loans, also known as agencies. We'll do a 10-year, 15-year, 20 or 30-year term loan limits and terms. Loan limits, as you can see, with the conforming, super conforming. And the difference is with conforming, the super conforming to conforming usually is about a quarter to 3/8% higher in interest rate because the risk is higher for Freddie Mac, Fannie Mae. Jumbos, anything over that number is where most lenders that's one of our sweet spots. And then also if you got 2 to 4 units, the loan limits are higher on those. Our main program is the 5/5 loan program. It's a 30-year and also a 40-year term, which a lot of people like. That's basically it's a 5-year fixed and will be fixed for 5 years, and then it will adjust every 5 years thereafter, which is unique in that most lenders that offer a 5-year fixed rate initially will have it's called 5/1. That means that after the 5 years, that will adjust once every year. So that can be very expensive going forward. We also do fixed rate seconds and home equity lines of credit. Next. Again, some of the unique mortgage programs that we do that we're quite successful with. One's called a movable mortgage, and that's our portfolio. As you said earlier, it's a 5-year, it's a 5/5 fixed for 5 years, and then adjust every 5 years thereafter. And it's again on a 30-year and a 40-year term. What's interesting about that, we have movable. That means that if within California, if you decide you're in San Jose and you want to move to the Central Coast, then you have an opportunity to move that mortgage to the new home. Whatever the difference in what the new mortgage will be for the new home, we blend that rate with the current rate with whatever the market rate is. Then it's not as competitive, but not, I shouldn't say competitive. It's not as good as it was. I have a lot of people, members that have had 2.5%, 3% rates that got it back in 2020, 22, 21, 22 that are moving into new location within California, and their blended rates are very much below what the market is right now. So that can be a good feature. The modification, which is really big, is that it gives you an opportunity in lieu of refinancing, especially in a downward trending interest rate market that we have now. You can modify the interest rate, the remaining term, and the term and the adjustment period. So that's really big. It's a flat fee of $3,000, cheap compared to what it would cost to refinance. And again, you can modify that loan through, and by the way, there's no qualifying, no appraisal, no qualifying for modifications. The thought is if you can pay the mortgage at the higher rate, you certainly can pay at the lower rate. Another program we have is a home purchase advantage. That's a low down payment mortgage products. We can do loans up to $2.5 million with 15% down. We can also do $1 million loan with 3% down. So it does have mortgage insurance, but the mortgage insurance is relatively low. We work with 3 different mortgage insurance companies, and we have preferred rates with them. So that a lot of people, that's gives you an opportunity to leverage your purchase. And another program we have is called a planned development loan, which is for new construction. We reduce the closing cost on new constructions. Next. Rate locks. Rate locks are really important. A lot of people ask about these. Basically, what that means is that let's say it's a purchase transaction. Once you get in a contract, we lock in the interest rate at the time of contract, and you're hedged against rates going up. On our portfolio product, we have the ability for a one-time interest rate float down during the lock period. So let's say you lock it in today and rates drop and your close of escrows in 25 days and rates drop. We will lower the interest rate. We did that a couple of weeks ago. We were able to lower everybody's rate an eighth of a point because rates dropped. So that's a unique feature that we have at Provident that no other lender that I know of that has. So it works for people and it does happen. Next. Monthly payments. So as we mentioned a little bit earlier, monthly payments made up of loan principal, loan interest, that taxes, real estate taxes, 1/12 of the real estate taxes, estimate 1/12 of the homeowner's insurance, and then sometimes where there's mortgage insurance is applicable, and also as you talked about homeowners dues, homeowner association dues. That's what we look at when we calculate the debt to income ratio. Um, you can, if you put down 10% or less on the property, then you're required to have an impound escrow account. What that is, you establish that account at the time of close. You contribute every month. You take 1/12 of the taxes, 1/12 of the insurance. You add it to that account, and then it accumulates. So when the real estate taxes are paid, which are due, first installment is due November 1st. Second installment is due on the February 1st. There's monies in it to be paid by us, and then the same with, you have to renew the the homeowner's insurance, and we can, we have enough funds in there to do that. So anyway, that's important. You don't have to have one. A lot of people do, because taxes are, as you can see, the first installment happens so it's November 1st, delinquent December 10th, right around the holidays. The second installment is due February 1st, delinquent April 10th, right around tax time. So sometimes people get caught where they have expenses during that period of time, and are happy that they don't have, that they do have, I should say, impound and escrow accounts. Anything else? Next. Okay, Michael.
All right, thank you, Norm. And just to back up what you mentioned earlier, as a professional real estate agent, I am unable to assist a buyer until they have met with a lender and know not only what they can afford, but at what price they want to afford. So it's really important that you meet with someone like Norm as soon as possible. All right, this is an estimate of closing costs. Start off by saying that in the state of California, we have what's called customary closing costs, which means county to county, city to city, the costs can change both the amount and who pays them. What's a buyer cost in one county, that same cost might be a seller pay in the next county. So this is a fictitious closing cost net sheet, if you will. Sales price of $1 million, mortgage 800,000, 20% down, loan origination fee, Norm's going to pay that, $0. Lender fee, flat $9.95. Again, what a great low price. Thank you, Provident. Loan origination fee, points, optional points. What's a point? 1 point is 1% of the mortgage amount. It's not always 1 point. It could be less than a point. It could be more. What would you pay that for if it's optional? You might want to buy your rates down. There are certain optimum times when it's good to buy your rate down based on your situation and the cost for the buy down, and other times it's not good. Again, Norm can help you go through that. Tax service fee, one-time fee, make sure taxes are paid on time, $119. Credit report, okay, $55 per person. Appraisal fee. This is for a third-party licensed appraiser to go out, look at the property you've made an offer on and the acceptance, and then determine if it's worth what you're paying for it. This is really key because if it comes in over, great. If it comes in at purchase price, fantastic. If it comes in lower, not a good thing. Because if it comes in under the contract price, all lenders, and I mean all, are going to go with the lower price, even though the contract says a higher price. Then the difference between those two either needs to come out of one or the other's pocket, or maybe it's split. We'll talk more about that. Hazard fire insurance. Wow, is that a big issue in California now? Always check with your insurance carrier prior to making an offer to find out what coverage is available on the home you're looking at and what will that cost be. PMI, private mortgage insurance, Norm talked about that. Impound accounts, love impound accounts. This is where instead of making principal, interest, taxes, and insurance payments yourself at separate times for insurance and taxes, you just send one payment into Provident and they handle all the payments as they come due, when they come due, and there is no charge for that. Every home I've ever got, I want an impound account on. I just want it to be so easy. Two one-time insurance policies. First one is a CLTA insurance. That's called the buyer's policy, and it's protecting the title of the property. When you purchase real estate, you're purchasing the title to the property. and you want the title to be unencumbered or free. What does that mean? Well, that means if somebody comes along after your owner and they say they had prior interest in the property and they had an ownership interest and maybe they didn't want to sell or know that it was being sold. There's a number of things it could be, but that would cloud the title. You can't sell, you can't refinance, there's nothing you can do. But with this insurance policy, they cover all that if that was to occur. It's good throughout the life of the loan. ALTA title insurance policy, that's a fee that protects the lender because the lender has interest in the property. They've loaned you money, so they need protection as well. Again, a one-time fee. Escrow fee. This is the same title insurance company because it's called Title and Escrow in Northern California. And the escrow part is the paperwork. So in Northern California, Title and Escrow is one company. In Southern California, it's two separate companies. And that is a one-time fee to handle all the paperwork, and all these fees are based on purchase price. Recording notary fee, $300 to make sure that you are you, and for a notary to handle that sign off. Top right, inspections, termite inspections, looking at dry rot, wet rot, pest infestation, and plumbing leaks. Roof inspection, looking at the condition of the roof and the life expectancy remaining. Property inspection, that is a wonderful inspection. It's a property inspector that comes out and he or she will go through the entire property from the top of the roof to the crawl space under the home, if there is one, open and close, turn on and off. They look at everything. This is not destructive testing. No holes are drilled, nothing sawed open, so they're not able to see inside walls. Okay, if you had all three of those inspections, I could tell you what needs to be fixed now, what's going to probably need to be fixed over the next 2, 5, 10, 15, 20 years, however long I'm going to live there, and what those costs might be. Miscellaneous charges differ in each county. In this particular fictitious net sheet, we're in a city where there's a $1,650 city transfer tax on the sales price of $1 million, county transfer tax of $1,100 on a sales price of $1 million, and prepaid interest simply means if you're closing in the middle of the month and we do a 30-day month, you're going to be paying interest for the 15 days until the end of the month. Okay? Grand total in this example, 12,701. In other counties and cities, it can be nearly twice that. So if you'd like to know who pays what, the city and counties you're looking for, shoot me an email and I'll let you know who pays what and what those costs would be. Okay? All right, so the first thing I do when I'm working with buyers is I sit down and I ask them a lot of questions. And this is just a small sample of the questions. And the reason I'm going to ask all these questions is because I tell them I'm building you a search, an automated search. It's going to go to you and it's going to go to me. And we're going to look at it and I will see your activity. I'll see what you click on that you like, what you don't like, and what you're considering so that I have an idea what appeals to you. With this information, after we look at properties, we can adjust the search accordingly. Maybe we don't need that family room, or maybe we do need a family room. As we search, we educate ourselves until we can narrow down locations, type of properties, and price. First question asked is the number of years you're going to occupy the home. Let's say you say 5. Then every question I ask, I'm thinking about the 5 years that you're going to live there. So if you look at the bedrooms on the left, you move from left to right. You say, how many bedrooms do I require for 5 years? What would I desire for 5 years? What am I neutral about for 5 years? And what don't I want? A negative search filter for 5 years. And the reason I keep saying 5 years is I remind people constantly, you know what? Are things going to change in 5 years? Are more people going to be coming into the home? Are people going to be leaving the home? So we want to make sure that it's going to last those 5 years and meet all your needs. And if we go down the left side, we can see there's baths, separate family room, separate dining room, garages, carports, appliances, and systems. Now, appliances and systems, the first part, is really discussion about the kitchen. And all I say is, oven range, do you like gas? Do you like electric? Do you like induction? How many burners? And the reason I'm asked that is because there's so many questions that end up coming up during the discussion of a kitchen. Someone might say, I am a baker. Someone else says, I don't cook anything in my house, so it should be the smallest room. But it's really important to everybody, that kitchen. So we could spend easily 15 minutes just on kitchens of what you're looking for. Refrigerator, how big, how small, how many, heating and air conditioning. There's so many different types of heating and cooling systems. I like to find out if people have allergies. Do they want central forced heat? Do they want electric? Do they want baseboard? So many options. gas, oil, or electric, city, sewer, or septic. Yes, there's a lot of places in our existing cities that are still on septic. So we want to have that discussion if that's something that you're going to need to change once you move in. It's not cheap. Washer dryer, probably most important in condos and townhomes. Most townhomes have washer dryers for sure. Condos, not always. The older ones, they may not have coin op so that the community, there's a on every level a coin op system. And can you convert? In other words, can you bring a washer dryer and have it installed, put the plumbing in the existing condo? Will the HOA allow that? Good question. Miscellaneous, anything that's important to you. Okay. All right. And the second part of this, we have roof at the very top. Let me give you an example how this works on the roof. So if you are going to live there 5 years, we should be looking at property that have at least 10 years, double what you're going to live there, remaining on the roof so that you don't have to pay for a roof to sell the property. Not to say you wouldn't buy a house that needs a roof if the price was right, which could make sense. But usually you don't want to have to worry about putting a roof on unless you're going to live there for a very, very long time. If it's over 30 years and it's a new roof, you will be putting a roof on. Type of siding, this is just aesthetics. What do you like? Stone, brick, wood, stucco, fenced yard. How big is the rear yard? What do you plan on doing there? Land is more expensive than structures in the Bay Area. So if you're looking at a house that has a huge yard and you don't need a huge yard, you're paying a lot of money for something you really don't care about. So if you're okay with a patio that you can entertain 20 people out there in a small grass area, you're going to pay less for the home. Frontages. What do you want out front? Big front yard, no front yard, that sort of thing. Pool I put in there as an example. Now, 45 years ago when I first got my license, and for the next 10 years, pools were in demand. They raised the value of property. Nowadays, fast forwarding really for the last 20 plus years, pools do not add value to a property unless the lot is so big, the pool's in a separate section. The size of a pool in a standard city lot, which is around 5,000 more or less square feet, you put a pool in the backyard, your backyard is a pool. However, I will tell you, I sell houses every year with pools. And the reason is because when I have a pool in the yard, fewer offers come in so frequently that I sell these houses at a great price and we're the only offer. That's how many people do not want pools. However, if we get a really good price on the house, which tends to be when it has a pool, then it's not that much to pull the pool out and just re-landscape, and you got a much better deal. Always keep in mind that anything that every buyer wants increases value. Things that no buyers want decrease value, and you can get a good deal. Maybe houses with no landscaping, it's just stone, concrete, that sort of stuff. Look at a house carefully. You can get a good deal. Neighborhoods, anything you want about architectural style, price range, homeowner association, we will explain those to you. Commuting times, I always like to talk about where do you work? Does anybody go to school? Where's the school located? Shopping, and then of course your place of employment. Because we want to look at how long you're going to be on the road, how many times a week to all those things you always go to. Okay? Types of homes. Okay. Most of you, I'm assuming, are looking at either single family or townhome and condo, or possibly both. Single family, share no common walls, generally includes front and rear yards. Owner responsible for maintenance of property inside and out. Owner pays all insurance costs. So what are we saying here? We're saying that on a single family home, you are the foreman of the ranch. You run the show. If you can't fix it, if you can't replace it yourself, you will pay people to do everything. There's nobody helping you on a single family home. Shift over to townhomes and condos, or what we call CID, common interest developments. Share common walls. There's a monthly homeowner association, okay? And that monthly homeowner association fee covers, but not beneath that, the HOA fee covers exterior grounds and building maintenance. So what does this mean? It means, and there are exceptions, that everything outside of the inside of your home, in other words, not the inside of your home, they take care of. They take care of the roofs, the sidings, everything. Now, you have to really read everything in detail to find out what the exceptions are. That's really, really important, okay? The HOA generally pays for the master insurance coverage. That master policy covers the building. If there's a fire, if a truck runs into the building, they cover that sort of stuff, okay? And review the financial health of the HOA. This is so key. Most, realtors will have copy of the HOA documentation prior to it going on the market. And if I'm going to go out and show a townhome or a condo, I'm going to review the financials of the HOA documentation to see if it's healthy. If it's not healthy, I am steering my client away. Okay? All right. People always ask, inevitably, where did the homes come from that you're showing us, Mike? How do they get to the multiple listing service? Well, foreclosures, top left. If a property is foreclosed upon in the state of California, 99% of the time, it's going to be put on the multiple listing service through a company like my own, and it's marketed just like any other property. Let me dispel a myth, okay? There's a myth out there that foreclosures are great deals. Foreclosures might be a great deal, might be the worst deal of the day. Just because the name foreclosures on there does not mean it's a good deal. That is a myth. It's property for sale that's been taken back by the lender, and we look at the value for what it is. And there is a lot of different paperwork on a foreclosure, so make sure you have a very good realtor. Underneath that is corporate transfer. Corporate transfer is when a company, generally now, transfers an employee because they're doing a great job and they're probably getting a promotion. And that's awesome. So when they get transferred, they didn't expect it 99% of the time. And so they have improved their 65, 70-year-old ranch style home in the Bay Area, new kitchen, new baths, they're making good money. And then, boom, they get relocated. That is a great deal because they're not going to get every penny back on a recently remodeled property, not in the purchase price. So we look for those because those are really usually nice properties. Those occur most times September through December. September through December. People want to get, or companies want to transfer their people prior to the new year. Top right, probates. Anything to do with the legal system of the state of California is termed a probate. That could be death, divorce, partnership dissolved, whatever the case. If the courts are handling it, it's a probate. Now, there's so many different types of probates that I could have a whole class on that. But the important thing to know here is probates are handled differently, kind of like foreclosures, different paperwork, with just a lot of crazy levels of probate. Make sure you have a good realtor. Conventional listing, that's just somebody selling based on market forces. What does that mean? Well, it can mean like, oh, the kids are gone. We don't need this big house. Or, oops, we're in a condo. We need a house now because we have two new kids. So that's just a conventional listing. Okay. All right. So we built your email home tour search, and it's going to come to you 24/7. And it's going to look something like this. Now you can see on the photo, it says 1/18. That means there's 18 photos to look at for this home. That can be as many as 60. So now those photos, can they be doctored? Yes. Okay. That's a thing that goes back decades. People using software to enhance the lawn or do this or that. They do that. So just warning you. Now, what you want to look at first is in the top right-hand corner, and that is number of bedrooms, number of bathrooms, and here we've got one. So that means it's a one bath home. In the parentheses, if you had one, that means that there's one full bath and one half bath. Approximate building size, 1,200. Approximate lot, 5,044. Year built, 71 years. DOM, days on market. The walk score is really cool. When you click on that, it's going to tell you how walkable. A 71 is pretty good. That means there's a lot of retail places, maybe even restaurants and so forth within walking distance. 70 and higher is pretty darn good walking score. Now, down at the bottom, you're going to see the comments. That's called the public comments. Now, oh, by the way, I forgot to mention something in the top right. We verify all that information, okay? So, for instance, that might have originally been a two-bedroom, one bath. They put up a wall and they're calling it a three. We want to verify permits and that everything's correct. Okay, public comments down at the bottom. This is the information the seller has approved that we can use on marketing, we can put on the internet. Really, really important. And if you look in the middle there, it says third bedroom without permit. Okay, that's an example I wanted to show you. At least they're saying it right here. That means when the appraiser goes out there, they will not call that a three-bedroom. They're going to call it a two-bedroom, one bath. So that will affect the value. That's how important we figure all these things in. Now, this public comments. You'll see over and over some of the same listing comments. And I got a few of the more popular ones on the next slide that I'm going to tell you what it means. Okay. All right. On the left, be cautious of all the property needs is a little TLC, tender loving care. That's red flags for this property needs a lot of work. It is rare that I go see a property where they say all it needs is a little TLC, that it doesn't need way more than TLC. So I'm just giving you a heads up on that. Great first-time home buyer or investor. How can it be good for a first-time home buyer or an investor? That generally means it's probably a 50, 60, 70 plus year old home. It's in livable condition, very dated, not attractive. Now, a first-time home buyer that's savvy will look at that and say, hey, I'm kind of handy. I can do a lot of the improvements here myself. We can redo kitchen, we can redo baths, all of this over time. Then when we sell in 10 years, we'll make a lot more money. True, the house has been brought up. It's going to look a lot nicer. Investor looks at it and says, I'll buy it. I'll rent it for 10 years. Then I'll have the tenants move out. Then I'll renovate the whole house and sell it. Both of them have the same idea, just a different approach. Contractor, special, or fixer upper, the bottom two, those can be a little bit dangerous because if they need what we call any health and safety features improved, the lender will not loan on it. Health and safety is a certificate you get from your city that says that home is habitable. If an appraiser walks in there and says, this is not even livable right now, you're going to have to pay all cash. And this is where a lot of people pay cash and they flip the homes after they remodel them. Top right, if you want something you can move into, look for these words: recently remodeled, new, renovated, or move-in condition. If those are there, the house is generally going to be in really good shape. You may not like the colors, you may not like the street, you may not like the floor plan, but it'll be in that condition. Okay? All right, so now you've been looking at property, you've narrowed down your cities, you've narrowed down the type of property, you know your max purchase price. This is where I tell my buyers, you need to kick it up. You're going to look at homes 24 hours a day, 7 days a week, which is an exaggeration, but it's true in that you have to go out on your lunch break, after work, during the week. When you're ready to put pen to paper on that purchase agreement, you know your area, you're good to go. Don't just go out on the weekends. You're going to miss out on a lot of properties. So you want to view those listings ASAP. Try to meet the owners of the home you view. You know, we went through COVID with all vacant homes, and it kind of stayed that way for a few years after COVID. Now we're starting to see owners stay in their home more. If it's an owner-occupied property and you like it, you want to schedule another time to go back when the owners are there so you can introduce yourself. Nothing helps you get your offer accepted more than meeting the sellers face to face, introducing yourself, tell them how much you love the home. They will remember you. They'll remember your names. And when 4 offers come in and you're the only one that have met the owners, you stand a real good chance of getting that property. While you're in the property, look in, under, and over when viewing a home, meaning open and close. Go in the bathroom. Don't just look at it from the hallway. Yes, you're going to have inspections, but you need to spend some time in that home. Remove your shoes before entering a home. Still to this date, most people will have, those booties at the door and ask you to put them on. Well, you know what? Those booties are disgusting. So I tell you, wear some slip-on shoes. Just be prepared to put some holes in your socks walking around in them. That's just easier, and those booties are really disgusting. Do not bring a crowd when viewing. Okay, here's the thing. When you're looking at a property, this is really an important purchase. You do not want to have it diluted by family, friends, or coworkers. Unless it's somebody in your family, like maybe your parents are gifting you money and they want to come along, absolutely. But everybody else is a distraction. Take them back on a second viewing. Okay? All right, don't make negative comments about the home you're viewing. So when you're inside a property, I want you to just say, there is a camera on me, because most times there are cameras in these homes. And there's somebody sitting in a desk somewhere and they get a ping that you're going through, they're going to watch out of curiosity. And if you like the house, that's great. But a lot of times when you like the house, you say things that aren't kind to the seller. For instance, hey, Mike, how much would it cost for me to take down this wall between the living room and the kitchen and update the kitchen? That's probably a very valid question, but try and ask that outside away from the cameras, because People don't like it when you talk about tearing their houses up, unless it's such a dilapidated home that everybody sees it. Maybe they really like the home the way it is and they had just remodeled that kitchen a few years ago. So you got to be careful about what you say. Again, don't bring a crowd when viewing the homes. Don't use the bathroom in any home you're viewing. You were not supposed to use restrooms. And in vacant homes, keep this in mind. A lot of times the water is shut off. Okay. All right. Second look. So this second look, this is what I do when somebody says we're going out the door, and you might say, "Hey, can we get the disclosures on this house so we can see the inspections? We think we really want to take a close look at it." That is a buying sign. You like this property. So I'm going to say, okay, since you guys really like this and you want to get the disclosures, let's walk back through it again. You don't need to read my list. It's really just a matter of walking back through slower, opening all the cabinets, looking inside, seeing if the oven's gas or electric. Just a second walk through if you're thinking about making an offer. Okay? All right, market analysis. This is never pretty in the presentation here, but let me explain what it is. You want to know what I think this property's worth? I will do a CMA, comparative market analysis, and I pull up the activity in the neighborhood going back, I go back 100 days now. We have on the left active listings. You probably looked at the one on Shoreview because that's the only active one. Then we have sold listings. And all we care about is the sold listings that are similar in size, bedrooms and baths, and in the same neighborhood as the one we're looking at and thinking of making an offer. So now at the bottom, we have three solds, all 3 bedroom, 1 baths, two of them the exact same square footage as our subject property. One says 40 square foot bigger, but you know what? Either there's an addition or someone measured wrong, because I'll bet it's measured wrong. And that tells us the high sell, the low sell, and everything in between. That's called a window of value. Behind this is going to be all the pictures of those properties that are sold. And we're going to go through them together. And we're going to look at how similar they are to the subject property that we're considering. So behind here, we have maps, show you what the streets are, busy street, court, whatever it is, how big the lots are, how the lots are laid out, how the home is laid out on the lot. And then we compare the photos again. And that's really, really it. And we look at the photos, we look at everything else, and we go, it's most likely like most similar to this one. And well, there's your offer price. And also, there's a darn good chance it's going to appraise because the appraiser is going to pull that same comparable. Okay. All right, there's two purchase agreements, the CAR or the PRDS that we use statewide. You want to make sure it has the most current revision date. If you're having a new agent, there's a broker review signature on the front page, bottom right, that says the broker has reviewed their work before you sign it. And then you're going to talk to your agent about, do we need an inspection contingency if we don't like the inspections or they're non-existent? Do we need a financing contingency? Answer would be no if you're working with Norm. And lastly, which we don't show on here, is the appraisal. I mentioned it earlier. If we have an appraisal contingency and it doesn't appraise, then you can renegotiate with the seller saying, hey, didn't appraise at that value. If you don't, I'm sorry, if you don't have one, if you do have one, if you don't have one and it appraises for less, you are on the hook as the buyer to make up the difference between the lower price on the appraisal and the contract price. That's a discussion to have. Now, if we have enough sold comparable properties to support value, then I wouldn't have an issue because it's going to appraise. Okay. Oh, and by the way, if anybody wants a sample purchase agreement, shoot me an email and I'll send you one for review. Best time to review it is when you're not really going to make an offer. Okay. All right, the offer process. You and your realtor will decide what to offer based on the comparative market analysis. You'll discuss possible contingencies in the offer, if any. Your realtor will present the offer. You're not in attendance at the presentation, and nowadays it's generally done by Zoom call or on the phone. Seller will respond by accepting your offer, rejecting your offer, or making a counter proposal to your offer. You can accept, reject, or counter the seller's response. Now, this process, it does take a couple days to put an offer together. So, you really want to see these houses as soon as they come on so you're not up against the clock on a presentation date. Okay? Right, the right realtor. You'd love to have someone with a ton of experience, but let's say it's your sister-in-law. She got her license. Still good. She's excited if you're her first client. Just make sure there's someone in the office, the managing broker or the training broker is looking over everything they put together before you sign it. Could also ask the agent if they're experienced, how many homes you sell, how many were buyers, how many were sellers. And if you're a first-time home buyer, always share that with your potential agent because you guys require a lot more handholding, a lot more time. A good experienced agent will tell you if they have the time for you. And during your meeting with them, you decide to work with them, you want to establish goals, determine a strategy, and develop a timeline to revisit that search maybe every week. Okay? All right, your offer's accepted. You're now in escrow. That means you're in contract. It's with the title and escrow company. It's going to take about 20 something days to 30 something days for most transactions to close. If the seller wants to close fast, Norm can accommodate. If they want a longer close, not a problem. During that time, you're going to have information coming to you that we're going to explain. All of us are down below. Oops, who's at the top? You are. You're the CEO of the transaction because you're the buyer. Like any good CEO, you have no clue what's going on. So that's our job. We're all down here. Your insurance person, the pest person, Norm's down here, your real estate agent's down here, title and escrow. There's so many things going on in that 30-day average period, but it's not so bad because we explain each and every item to you. Okay? All right, this is what my escrow task list looks like every morning. I get up and I look at it and I go, what's due today? What's due tomorrow? So we have a running timeline of everything we have to do. Now, this does not always mean we contact you. A lot of this goes on behind the scenes, but we'll come to some item here where it says, oh, seller to review and sign such and such. So I go, oh, I got to talk to them today about that. So this is what a good portion of our day is like, and I'm sure Norm has a similar list. Okay. All right. We just shot Real Estate 101 through a fire hose at you. I have the ability to again get books for those of you that are buying anywhere in the United States. Let me know what you're purchasing, and I can give you a beginner's handbook if you're a beginner for that particular area. At least I can refer you to where to get it online. Also, if anybody would like a real estate agent with a lot of experience anywhere in the country, just let me know what city or cities, what type of property, what expected purchase price, and I will research agents because I have anybody that has a license in the United States, all states, I've got their background information. Okay? Norm.
Yes, sir.
So this is the part where we might have some questions, and I think there's one for you right now.
Okay.
Yeah, for Norm, can you obtain a pre-approval letter even if you don't have a particular house to purchase?
Yes, you do. In fact, that's what most pre-approvals are done for. What you want to do in a pre-approval is find what you're comfortable with in terms of a purchase price and down payment and loan amount. So yes, you can do that. In fact, they're very flexible. I usually get them done within a day of receiving application, which by the way, we do online. There's a link to do that. And I'll be happy to send that to you along with a list of documents we need. I review the documents, the application, and then have a conversation with you. And then I can go ahead and issue that approval letter within the next day. But they're also very fluid and very flexible. So yes, you can get a pre-approval letter without having a property in mind.
Okay, any other questions we may have out there? Now's a good time to send them in. If not, please do keep in mind that both Norm and I are always available, and you're going to have our contact information, email, text, phone call. You have some questions, we're here for you.
Right. Yep. Any more questions?
Oh, yes.
It says, did I understand it correctly that buying a fixer-upper is basically impossible unless you can pay cash?
Well, no. The ones I was showing you, if they don't pass health and safety, like it's danger. They don't have a sewer line. They don't have fresh water coming in. They've got holes in the roof, holes in the floors. There's a certain point where lenders are going to go, no, this is not worth it for us. So you can get a house that's dated, okay, and needs everything, and there can be some things wrong with it. So it's technically a fixer-upper, but the ones I was showing you are just way over the top. They're in such poor position. You just need so much. Most fixer-uppers that I sell are dated. They might need a furnace in the next couple of years. They might need a roof in the next couple of years. So yeah, there's fixer-ups out there that you can make money on. They just can't be catastrophes like the examples I showed you.
Anything else?
Good question.
Doesn't look like there's any more. If anyone does happen to think of any questions, here's Norm and Michael's contact information. And again, everyone will be receiving a copy of the slide deck in about a week. Oh, here's
Well,
one more. There's
I'd
one
like
more
to
thing.
take, yeah, I would like to say thank you to everybody that attended tonight and taking time out. And I look forward to the opportunity to work with you. As Mike had indicated, I'm rarely as accessible and look forward to your questions and hopefully have an opportunity to work with you.
Norm, there is one more question though.
Oh, okay.
Can rental income be used to count as income for a mortgage?
It depends. Short answer is probably, but it depends on the circumstances. We don't use 100% of the rental income. We'll use typically 75% or whatever the rental income is, and we just get that confirmed by a rental survey, and then we offset that rental against the whatever the total principal, interest, taxes, and insurance payment is. And so if it's a negative, then it becomes a hit to the debt to income ratio, becomes a debt. If it's a positive, it may not be counted as income. It just show as a wash.
Wow, that rule's been the same for as long as I can remember.
It sure is. It's being conservative.
Yeah. Okay.
Like that's about it. Thank you everyone for joining our webinar tonight and have a good rest of your evening.
Thank you, everyone.
Thank you.
Have a good evening.
You too.
Thanks,
Thank you.
Norm. Thanks, Amanda.
Thanks,
Thank
Michael.
you.
Thank you, Amanda.
Thank you guys.
Okay, bye-bye.